You are listening to Mining Stock Education.
And then that share price started to dwindle, and really, Bill, I ended up selling, and I ended up selling before it really slid. That company ended up being a success in terms of it was bought, and I think it's going to be a mine, but I don't think anybody besides management ever made any money. And so those situations, I think there's something to be said on companies that, are able to execute and they ultimately get bought out. But when you don't make investors money, I think there's a real issue there. And I think ultimately that's what probably keeps me away from investing in them in the future.
Welcome into Mining Stock Education. I'm your host, Bill Powers, with my co-host, Brian Leni, who also is a newsletter writer at JuniorStockReview.com. Brian and I get together on the show to offer some junior mining insights based on our firsthand experience, to talk through feedback we've gotten over the last month, things we're thinking about, and overall issues we think that might be helpful. And Brian, I'd like to start with something I've been thinking about over the last month, and I'm going to post you some situations, and we're going to categorize it as a scam, as shady, or sincere. And the reason I bring that up also is because if I look back over some of the emotions that are associated with some losses that you incur, and perhaps big losses you incur in small cap stocks and mining stocks, your emotions might take you to, oh, this is completely a scam. And if that's just your assessment, you put no responsibility on yourself, you move on, you blame others, you don't grow. I also see that in a lot of feedbacks and comments where it's just like categorically saying this thing is a scam, when perhaps the analysis would be a little more nuanced. So my first question is, how do you define a scam versus what is shady? Where is that line drawn?
For me anyways, I think it's probably an intent. The difference between shady and a scam is definitely with the intent to, and I guess in this case, when it comes to the junior resource sector, is to separate investors from their money, with no intent on trying to add value to the bottom line. Shady, I think, is sort of maybe on the borderline, or maybe rides that line between doing something that maybe you first intended, or had the best intents of adding shareholder value, but maybe you're skirting that line in terms of the amount of information that is released in a timely manner, or maybe it's talking about a topic or releasing information about a topic that doesn't give the full picture of what's going on. And again, it comes down to that, to me, that intent of what's going on. And usually this stuff that's totally a scam, these guys have the full intent of it being a scam right from the beginning. And while those should be, more clear right from the beginning, I can see from my own experience how they, especially for a new investor, how they can be tough to sort of discern between the two.
And I think, Brian, like in my experience, as I've been a part of stories that succeeded, then fell apart, there's an intense pressure put on management when stories begin to fall apart. So in one unnamed, undescribed situation that I was close to, in which something was at least shady, let's just say, it was the pressure and then the psychoanalysis that I came out with afterwards is that the person justified what they did because, oh, I need this in order for the greater good of the whole company. Therefore, I can substantiate my undescribed decision because of it. Because if this works out, it'll be good for everybody, even if it's not 100% truthful.
Yeah, that's that is the line that people walk. And the letter of the law says that you, again, talking about that you need to disclose basically everything that's going on, and you need to do this and you need to do that. And that CEO really does have to walk that line in terms of how they approach that. And they know the perception, depending on where that market is at, where their share price is at, what that means. I think subjectively, each investor to a degree is going to have to look at those those situations probably and make a decision on themselves of where they see those actions, and whether they put it to more nefarious, or they decide that no, that was for the best of the company. I think ultimately it probably, for most investors, it depends on where that share price goes and what exactly was withheld or not withheld, or how things were spun. But yeah, you bring up a really good point.
And I'm also talking from the vantage point of you and I, we invest directly in the companies, and we have for some time. So you're making an investment decision based on firsthand discussions with management and the forward-looking statements and their description of reality as it pertains to the company currently. So if there's misrepresentations, and really misrepresentations is just lawyer speak for lying, right? If there's misrepresentations that influence your purchase decision, is that defrauding the investor? Or if there's material information that you should be disclosing, but you're not disclosing prior to me writing a check, how do I categorize that?
Well, ultimately, if it's material information, it should be disclosed. How you choose to communicate that disclosure, I think some people are better at, if you want to call it spin or adding more color. I think there's people that do it better than others, and of course, the better CEOs can sell anything, and so maybe they're more prone to talk about things more openly. Then again, like honestly, I do believe that, obviously, if something is material, it should be disclosed 100%, and you sort of have to take your lumps with everything else that's going on. And for the companies that have been structured well, are trying to do good work, I don't think it matters over the long haul, and the short-term bumps in share price or weakness will be overcome ultimately, or the company will dissolve, as it should, and not everything is going to always work out. So sometimes bad information needs to come, or it always needs to come out, and the market decides what it wants to do with it.
What do you think about junior mining executive of an Explorco? They raise money on a certain drill program, lay out expected meterage that they're going to do and the time frame they're going to do it in. They raise the money, they send the drills out, they drill. The drill core is sent to the assay labs. Months go by. You don't hear anything from the CEO. There's no news release. Everybody that put their money speculatively into the company is like, hey, what is going on with this? And all you get is crickets. In that situation, is the CEO lying? Minimally, is it becoming shady? I'm not willing to say it's a scam, but what in the world is going on? Because if you promised the drill program and raised money on it, you need to get those results in a timely manner. How do you view this?
I find it hard to sort of answer the question fully, because the letter of the law speaks to the fact that information is supposed to come out, it's supposed to be the full truth, and it's supposed to be in a timely manner. And I'm not suggesting that it shouldn't. I think for me, there's more of a gray area where I do look at things sort of individually, and I do think there's some strategic thought that needs to be put into how information is sort of communicated to the market, when it's communicated and such. I believe the letter of the law in terms of drill results says that, when something material comes up, the company has to release it. But there's sort of a little clause that says, well, but if you're taking your time to understand what those drill result means in the context of the bigger picture and such, you don't have to release it right away. And I think this is what you'll see a lot of companies lean on in terms of if they withhold drill results, is that they're waiting for other things to come together, or they're comparing it, analyzing it before they release and sort of give the market their spin on what it means or doesn't mean. And so for me, like I do look at these situations individually. I think that, strategically, the companies do need to be mindful of how they're releasing that information. So I think the biggest thing for investors to sort of contemplate is just how that situation unfurls itself. What were the inputs, the outputs, and then you kind of make your own judgment with yourself in terms of whether you thought that wasn't right for them to do or was right for them to do, and then you can sort of put it into that silo of maybe you think it's shady, or maybe you think it was a good strategic move for the company, and that's the way you go forward. I think the better you know these companies and the better you know those management teams, the more apt you are at making that decision. And so for me, I make I keep the portfolio somewhat small. When I invest, I try to understand and know management as well as possible. So I sort of understand how they're coming to their conclusion about how they're communicating something, whether they're going to lump drill results all together and release them in one clump, or how they're going to approach that. And again, the basis of the conversation is just for you to think about it and not just look at something, have an emotional thought or feeling and just act on it, or say, it's shady right away. There needs to be more thought, and especially with companies that you're invested in, you're going to have to take a more intricate view of what's going on.
So you added a better S than I added. Let's replace sincere with strategic. So scam, shady, strategic. All right. So now I'm going to give you a hypothetical. Is this strategic or is this shady? The drill program's announced, the Explorical goes out and drills, the assay results, everybody's like, where are they? Crickets from management. Later on, management says, boom, we negotiated this deal with the JV partner on this project, and I didn't release the results because I had these negotiations going, which is going to be for the betterment of all shareholders. Is that shady or is that strategic?
Honestly, some of these hypotheticals.
And can you do that?
Well, it's tough. It's tough because there's so many things that sort of come to mind in terms of where the share price is. If that's strategic, what price they're coming into the story at, whether they're going to gain a lot more than they should from those drill results, whether that share price should have reacted to the drill results, gone up higher, and then the strategic comes in. It's super hard, to get too hypothetical with the situations. But what I would say is typically, I would say that management is trying to get the best price that they can from a strategic, meaning if the strategic is going to take a 9.9% position in the company, they want that to be meaningful in terms of the money that's coming back to them. If you're a $10 million market cap company, a 9.9% position is $1 million, which, is essentially nothing. And so you always have to put things into context. I would generally say, and I'm pretty confident in this, that management wants to extract as much money as they can from any, especially senior mining company or strategic investor. And they want to do that at the highest price possible. So therefore, in that situation, I would say it's highly likely that it's a strategic decision.
All right. So we've been talking without full description with some of this, theoretical, as you said. Now I'm going to give you a concrete example that we can chat through from September of 2020. At this time, Reuters did an exclusive article, and the headline was, Tesla in talks to buy low-carbon nickel from Canada, sources, by Pratima Desai. And again, this was on September 11th, 2020 at 9:21 Eastern Time, AM. That would be a Friday. And this is what the article writes. Tesla is in discussions with Canadian miner Giga Metals about helping to develop a large mine that would give the electric car maker access to low-carbon nickel for its batteries, 3 sources familiar with the matter said. Alongside its goal to reduce pollution from driving, Tesla is also striving to reduce its own carbon footprint. Tesla will give you a giant contract for a long period of time if you can mine nickel efficiently in an environmentally sensitive way, CEO Elon Musk said in July. So now Elon's name is being directly linked with Giga. Giga Metals' low-carbon nickel plans include turning waste from its mining operations into cement-type rock using carbon monoxide in the atmosphere and using hydropower. Giga Metals president Martin Vidra declined to comment on any talks with Tesla, but said, Giga is actively engaged and has been for some time with automakers regarding our ability to produce carbon-neutral nickel. The cost of developing our project, excluding bringing hydroelectric power to the site, will be less than $1 billion. Tesla did not respond to requests for comment. End of quote. So the net effect of this was the stock was halted on that Friday, and people had this rumor over the weekend. On Monday morning, the stock opens, I believe, at 60 cents, cruised well above 240 a share on 23 million share volumes. So this thing is just like a rocket ship going straight up. Now, over the first days of that week, on the 14th, 15th, 16th, that week, the directors of Giga Metals unload their stock. Director Anthony Maluski sells about $6.3 million worth of Giga stock into the rumors. President Martin Vidra sold over $1.5 million worth of stock, most of his position. And what are you to think of this, Brian? I mean, I think is this a scam? Is this shady, or is this strategic?
Well, I remember this very vividly. I was pretty focused on the nickel sector at that moment in time. I definitely knew Giga Metals, knew the project, knew the CEO, Mark Jarvis, and sort of, where that company was headed. I guess, first bluntly, to me, it's a hard situation, because I think these guys have all the points of plausible deniability in terms of how this all came together. In short, though, I do believe it was a scam, but they have all the evidence to kind of support their notion that they had no idea, and really it's the ignorance of the investors that ran the share price up that are at fault. And I don't necessarily disagree, but let's start with the journalist. I think there is a lot of journalistic integrity that's lost into this particular author or journalist. The way that she wrote the article makes it very suggestive that there is something more going on than actually is. But obviously, the way that it was written, anybody can be in talks, but it means nothing until you have a signed MOU. And again, if you want to buy on rumor, that is completely your mistake. And the fact that, I think if you look deeper into this, I think that there's a tie-in with Anthony. I think there was an article written on Cobalt 27 or 28, whatever it was, and prior with this same journalist. And so there's a tie-in there, that there's obviously a connection, how the article is written, and then the blowout of shares the following week shows you that the directors or the management. I don't know about Mark. We were sort of discussing that prior to recording, but you can see that there was a tie-in, almost a plan in to sell into that strength, and typically stories that are legit. And I'm not saying that Giga is this way now, but at that moment in time, and with those particular people involved with the company, there was a clear, in my opinion, there was a clear move to unload shares into that strength. And ultimately, as an investor, if you fall for something like that, that becomes your problem. But to me, again, we get back to that intent. And to me, there was every intent to draw a correlation between talks and one of the largest, battery consumers or makers in the world, in Tesla, and at that time was at arguably its peak in popularity. And I vividly remember Elon saying, and I believe it was in one of the quarterly's financials, he said that about nickel. And then again, you have to be probably more focused on the nickel sector as broadly. Again, this is my opinion, to probably understand that Giga's project in Dease Lake, where it does have some interesting points, to me is not where a company like Tesla is going to go first. And instead, you see a few years later, they do a deal with Talon Metals, which makes a lot more sense in a lot of ways, considering the quality of the deposit. And so, to me, there is a nefarious element to it. They have every probably avenue to plausibly deny it, but I don't believe it personally. And these are the types of situations that, as an investor, you have to learn from and be able to recognize that until you see something signed, like a MOU or some sort of definitive offtake agreement, to not believe anything and act in that sort of way until you know something is real. And it's a shining example of how these guys can take advantage of the investors that just don't know.
Okay, if we give them the benefit of the doubt that the source of these rumors did not originate from anybody at Giga or anybody associated at Giga to a Giga person that functioned as a proxy for somebody close to the Giga story, okay? if we assume that, or a big Giga shareholder that we don't know about, if we give them that benefit and then they use this run up, tens of millions of shares over $2 to go ahead and raise, let's say $100 million, then they just benefited all of shareholders. So then I would say, okay, that was strategic. You didn't cause it. I'm giving them the benefit of the doubt. This run on this narrative, and then you use the run on the narrative to raise a bunch of money for all of your shareholders. And it's like pat on the back, strategic. Would you agree with that assessment if that would have been true?
Yeah, I think if you're able to raise money off the back of it and retain value because of it, and you didn't, like the good companies that have run up in their share price, you do not see management selling into it. And so, like, these are the key points to keep in mind, is that management wants the price to go up. Like, good management teams are invested. They have a similar goal in mind as the shareholder, and they've got stake in it. They've got 5%, 10% of the company. They want to see the share price go up, and they want it to stay there, and they ultimately want to be bought out, and they want good things to happen. When companies or management teams or directorship start selling into price action, that tells you that that's either hit where they think the value of the company is, and it's not going any higher. And the way that they get there, if you connect those dots, to me, just points towards the intent being scam. And I think that's sort of how you want to draw the connection. The strategic side, when you see value retained, when you see management buying or doing a placement, and you see smart money coming in and buying at that higher valuation after the run up and after whatever sort of led to the run up, then I think that's usually a sign that you're on the right path and that the company is making a strategic decision in the way that they decided to perform. In the case that we're talking about, I don't think you see any of that whatsoever.
Okay. I'm going to give you a little pushback just for the sake of discussion and kind of working through that gray line of when is it a scam, when is it shady. So yeah, this is minimally shady in my book, minimally shady. Okay. But because you defined scam as having intent, shall we say intent to defraud, like a legal term, you see this, right? So if you have intent to defraud, are you, in your assessment or the lens that you apply to management, what inputs do you have in your own thinking to where you're going to lean towards, no, this is a scam? Like, is there assessments of prior behavior of management that would conclude you to say this is more likely a scam than it is just being shady? Or is it your default position, I don't trust most people, and I think they're going to take advantage of me, so I'm going to err on the side of saying scam versus shady?
I think all of the above to an extent. What I'd say first is this: prior actions definitely speak louder than words. People can talk a lot of different things, and I've always believed in action being the true thing to gauge people by. And so prior action, that's number one. Number two, yes, I think personally I am more skeptical or maybe cynical in a way about how things go down. But I think situations like this, to me, again, you look, was it contrived? Was the intent from, I don't even necessarily know if that matters. I can draw lines, it's totally hypothetical, and say that to me, that it seemed like there was intent, but just the actions speak louder than words. The fact that the share price action was sold just tells you that, and I forget what it translated into market cap. But if the project was that good, you should have expected a bigger buyout than that, or if it went into construction, you should have expected a bigger win than you did when you sold those shares. So it just never came together in this particular situation that there wasn't some malintent or something behind it. And to me, like that, I basically written off those people, and that's a personal decision, and everybody looks at these things a little bit different. But for me, that's enough to log into that prior acts, and I will not be caught by them, at least in the future, by investing in these sorts of games that they play.
Okay, so we invite anybody on the show that we've been talking about to come on the show. If you view it differently, we have the public data, we have the headlines, we have what happened in the stock chart. I've researched social media, so I have some of those things which I'm not bringing into this discussion. We know what you sold. If you want to come on the show and talk about it, we'll give you the floor. You explain yourself, we'll ask you questions. So that's an open invitation to anybody specifically named or perhaps indirectly spoken of in our discussion today. And that's a standing offer for any time Brian and I talk through some of these things. And by the way, these are the type of conversations Brian and I have had offline for years. We just thought we'd bring some of them on. Brian and I shoot the breeze for 2 hours talking through different angles of these things. Sometimes he challenges me, sometimes I challenge him. And then I say, did you know about this? And then he says, did you know about that? And it's one of the ways I've been able to grow as an investor. And Brian's been a key sounding board as iron sharpens irons, even helping me with my own perspective on this. Now, Brian, when it comes to finance guys, okay, when I've invested with geological guys on going into cash flow situation, a development supposed to be cash flowing, when I've invested with geological guys, I feel like they've been raked over the coals by a lot of House Street and Bay Street because they don't know how to handle the finance guys. They're poor. I feel like so much of the value was stolen from me because the CEOs didn't know how to handle the finance guys. So you say, why couldn't there be like a finance guy there to help this situation? However, I've also seen it when the finance guys are in charge of a junior, they cannot help themselves. When there's quick profits to be taken, they're not thinking about how will this be perceived by the market. They're not thinking about what can I do for the betterment, like trying to raise a whole bunch of money now that my share price is so far above what it should be. They're like, no, how can I cash in my personal shares rather than do what's best for everybody here? You know, what is your thoughts on this? Because on the one hand, I know the downside of having a geological guy that's not good in terms of finance, but I'm also aware of the side when a guy is looking at it as an investor, him first, and a finance guy, and he knows all the shenanigans. He doesn't always use all that insight and skill for the betterment of all the shareholders.
Personally, I think it's situation by situation. I wouldn't paint either side with a direct correlation to being like a geologist being less savvy on the financial side and a financial guy being less savvy on the or maybe I think the way that you showed it or framed it was that they're more prone to maybe doing stuff that's the best for them. Like for me, it's always been a situation by situation basis where, again, you have to look at the situation by how a lot of these things are going to be revealed in the financials and the way that they've structured the company. The guys that have structured it, that they've got super cheap founder shares where they've got literally their own money invested, so they're taking very little risk, that they pay themselves extremely well, both in salary and in options. Like these sorts of things show you the padding, and I've seen both sides guilty of it. The other side with the geologists, the guys that are very, very technical, often the guys that I think are going to have trouble with the financial side of things are the guys that really aren't good on the sales side. So if you talk to them and they purely want to talk technicals, and they sort of skim over the financials and how the financial side is set up, I think that probably gives you a little bit of glimpse of where their weakness might be. But I don't think it's ubiquitous. I've seen a lot of the smartest guys always have somebody on their team. This actually goes back to Dave Lotan's sort of picture of how a junior should be set up, where you have a scientist, a strategist, strategist, and
salesman, right?
Salesman. Yeah. And so you you have to find those three components, and sometimes people have dual roles, but it's sort of up to you as the investor to sort of pick that out and see who's playing each role, because basically how you're describing is they each are an integral part of a successful junior. And and the other thing he says is, like, you can have two, and you can have one guy playing a dual role, but too often you have one guy, he's playing all three roles, and that's really what you want to stay away from. That guy that's usually just the salesman that doesn't have the geological backing, or maybe just has no strategy whatsoever. And again, you can pick this out very quickly, I think, by looking at what their plan is for exploration or development, and then looking at how the company is structured, how they've done financings, all these other things. And that tells you that these components are missing. The best companies, they fill the voids. They either have those three people, or they have, that guy at the top that's the salesman and the geologist, or he's the salesman and the strategist. The bottom line is, I think that CEO most often has to be that communicator, so he has to have that salesman role. But if you try to find companies, try to answer that question that Lotan brings up, because I think it makes so much sense when you put it into context, to, especially if you look back at your successes and the people that filled those roles, you can start to see how he came to that conclusion.
So if you have a finance guy that has done what I just described, where he trades, he's in charge of the company, but trades his own stock like he's an investor, and you see that, or in this case where the leaders of Giga Metals sold in and made millions of dollars on a rumor on their own stock, okay? If you see that, would you categorically write off that finance guy and just say, there never will I trust him with my money, even if you could acknowledge that there's other skills or networks or successes that he brings to the table?
So I give you my experience. The first time it happened, it was back in 2018, I believe it was, where a company CEO sold $1 million worth of shares, and it was at a significant discount. Like, I think the share price was trading around $1, and basically they sold their position at 25 cents, and it was $1 million. And I think it represented maybe half of what their position was in the company. And I was infuriated. Like, it actually ended up being one of the companies that I was pretty concentrated in, and I was very positive on their direction for development. And so I asked, I'm like, what is going on? Like, why would you sell that many shares? And it didn't really seem to be picked up by the market. Like, there wasn't any weakness, and maybe I was the only one paying attention. But so their share, and then I inquired, and they said, well, they needed to sell the shares, and they're potentially buying a house, and they went through a divorce, and blah, blah, blah. And so at first I was kind of like, okay, well, it sort of makes sense. And then that share price started to dwindle, and really, Bill, I ended up selling, and I ended up selling before it really slid. That company ended up being a success in terms of it was bought, and I think it's going to be a mine, but I don't think anybody besides management ever made any money. And so those situations, I think there's something to be said on companies that, are able to execute, and they ultimately get bought out. But when you don't make investors money, I think there's a real issue there. And I think ultimately that's what probably keeps me away from investing in them in the future. So, that's my experience with it. I think that investors that come up with the same situation probably should inquire about why a director or maybe a management member is selling shares. Probably matters to what degree. Like, is it half their position? Is it $10,000? Is it $20,000? Why are they selling it? I think in some situations there can be probably plausible reasons why they're selling some stock, because they need it. We all live our life and have families, and there's things that come up, and so you need to investigate and ask the questions about what's going on, and then ultimately, though, it comes down to yourself and whether you believe what they're telling you is true, and that it ultimately there's nothing nefarious or wrong with what they did. But that's a subjective opinion that you're going to have to come up with yourself. But I think the bottom line is that you have to ask some questions before you fully judge. But usually by the size of the position the person's selling tells you a lot about what's going on and what share price those shares are at. Like, if they're selling a bunch of founder shares or or early seed shares, usually that's more linked to selling out to the market and blah blah blah. But
So
yeah,
you saw in SETI the total amount that he sold. Did you know what his cost basis were for those shares?
Yep.
Had
I
you
asked.
Okay. Did you call him when you saw that occur?
Yeah, well, again, and this was pretty early on. Today I would absolutely call right away. Back in 2018, I was sort of taken back by seeing it, and the first thing I thought of is like, what did I miss? Like, there's something wrong with the story. There's something, and basically what happened is I asked about it at the next like update call that I had. And so it wasn't right away, but I did eventually ask it, and I didn't ask it directly of them. I asked it of the guy I had the call with, which was there was basically two guys running the company, and I was talking to the sort of second in command, and they were straight up and told me. But ultimately, it was my decision. It ended up being a good decision because if I would have held on, the company would have got bought out, but I wouldn't have made anything. In fact, I probably would have been sitting at a 60% loss. And so ultimately it was the right decision. And again, I don't think that's necessarily why the company ended up that way, but it's not too far off from what you're describing in terms of this guy is a financial guy, how he set the company up, and such. And so that was my experience. But I do think it's something that people need to inquire about, ask questions, and make a decision.
I've had finance guys that I've talked to that have had successful exits that even told me, like, Bill, I can't sell. Multiple. I cannot sell because I understand what that means. I brought my whole family into this thing. I'm going to sell when the company is bought. That's essentially my exit point. Yep. And have you been told that by finance guys too?
Yeah, well, and it's more or less true. Like on a grand, like I said, like on a grand scale, if somebody pulls out 30 or 40 grand and they've got a multi-million or $1 million position, and they tell you that they're doing that to buy a car or a down payment on a house, okay, I totally get that, and that's is what it is. But I do subscribe to the fact that, the advantages that you get, and again, this is subjective and this is from the investor point of view, the advantages of what you get with being in a junior company executive are sort of balanced, and the lower cost basis that you have are balanced by that inability to sell, because ultimately you sell or you profit to the highest degree when the company is successful. And I think that's basically how it should be. And if you can't afford to be the CEO, take a salary, and not have to cash those shares in, then you probably should be doing something else or be at a different component where, especially the CEO, shouldn't be selling massive amounts of shares into the market, cheap shares at that. So again, that's just the way I view it. People need to do their own thoughts on it and come up with their own sort of levels of what they accept and what they don't.
Brian, when a company is successful geologically, which then translates into the market cap in the shares, do you then ask yourself, what was the role of skill? What was the role of luck in this thing? And here's why. Because I've looked at companies that I won't invest in, that I said when it was set up, and in fact, other Vancouver insiders have told me afterwards, yeah, that company was set up as like a pump and dump, and they just happened to hit something good, right? So yeah. It turns into a pump and dump that turns into a real company. And then you have to ask yourself, like, was that skill, or was this just a vehicle for them to tell a story, do their thing with the shares in the open market, so forth, that actually happened to have geological success? Like, there's a company I'm thinking of in particular, that's how I assessed it, which then caused me to think, when companies I like or leaders I like, have success, what should I attribute to luck? What should I attribute to skill? And another question, a tertiary point would be then, if you've had multiple successes, at what point is it not luck, but skill? Any thoughts here?
Well, I think those repeatability stories, like the Ross Beattys of the world, it's skill. And then I think luck is sort of the cream on top, where you buy, let's take the copper story where, you buy a bunch of distressed assets at the bottom of a copper market, have the skill to sort of put those things all together, and then have the luck to sell it when the copper price goes up and is rocking. So having the luck is probably in the timing of the cycle to a degree, but the skill is having the ability to buy assets when they're cheap and put them together and make them something that's desirable to a senior mining company or whoever is going to purchase it. And then again, hitting the maximum amount of return is hitting that cycle at the pinnacle, and selling it when copper is, $4.50, $5, going back 10, 15 years. So I think those sorts of things, those best people, again, I think money and success sort of begets more money and success, and but you need the skill to sort of perpetuate that. And so those people that are continually successful, I think, there's definitely a pattern there. We're talking about structures of companies and financials. And to me, the root of or the intent of a company is sort of rooted in those financials and the structure. Right away when a company is set up to profit from the market versus profit from being an actual mining company. And, both of you and I have had the displeasure of being in a position where, we talked about it, the scorpion and the frog, where the scorpion can't help but kill the frog because they're a scorpion. And this is what ends up happening, I think, a lot of the times, even with the companies that are sort of lucky. They were intended to be sort of scams, but they ended up finding something. They take it, they move it forward, but they can't help themselves to continually try to remove value from the company. And this is through, shady deals with, being the owners of the drilling companies, or some subcontract director owns a company that subcontracts this or that, or large salaries, large, lifestyle type budgets. And so usually I think the investor can see it's where the structure and the financials tell you where it's rooted. And then the other stuff, anybody can be successful. If you start doing, like fairly good geological work and uncover something through geophysics or some geochemical anomaly, and then you ended up drilling it, you can be lucky, even if your intent was to just defraud everybody. So again, investors have the tools, whether they use them or not, to sort of look at things. And even in, the lesson I'll put words in your mouth and saying the lesson that we've sort of learned with the scorpion and the frog is that typically these people don't change their colors, even if it's on a plate for you. And you have to learn from it. And ultimately I'll take that mistake with me as something I need to learn from and change. And this goes into another question, Bill, to talk about the feeling of regret. It can be a big one. And, I think carried too far, it can become a really big problem, not just in investing, but in your personal life. So what's your thoughts in terms of the emotion of regret and how it fits into an investor's modicum?
So it can paralyze you, and it can also cause you to have, even though we're talking about some of the risks that investors need to worry about and some of the shady characters that you need to be aware of, if you do have to have a hopeful and optimistic viewpoint in life. That's, if I err on anything, and you know this, Brian, it's because I'm too positive too much. But I think because I'm too positive too much, I've been able to accomplish certain things in my life and encourage others, because even when I go through a downturn, I'm able to lift myself out of it. And if you're always looking backwards, you're not going to be successful with whatever's before you. And my dad sent me a book, actually. He texted me and he said, "Bill, I have a book on the way for you. I want you to read chapter 5. And so I'm like, I didn't even ask him, like, what's in it? I'm like, I'm just going to be surprised. So Amazon delivers the book. I open it up. I'm sitting at my desk, this desk that I'm sitting at now. I'm reading it. And it starts out about how a farmer was defrauded through a business venture that failed. And he had sold a huge chunk of land, which was a large part of his net worth. And then he lost it through this venture deal. And not only that, this was like in the 60s, he put another $25,000 cash on top of the principal from selling the farm, and he lost it all. And he was just devastated. And he said for 2 years after that, it paralyzed him to the degree that he would go out and plant his farm, and he would, with his words, essentially curse the ground, saying, if I plant deep, I'm not going to be successful. If I plant shallow, if I plant cotton, if I plant wheat, it doesn't matter what I do. It was just gripped with negativity. Long story short, he came to the realization that if I'm going to make anything what's left of my life as a farmer, because you're a businessman, I need to change my perspective. So he altered his perspective and had a more positivistic viewpoint on life. And long story short, not long after that change in perspective, he got a call from a family in the area that had a farm in the family for 100 years. And this family, the old farmer died, and the family was like, well, what should we do with this? One of the cousins said, okay, well, I'll buy the farm. Just go see what the market value is for it. And so when this farmer got the call, would you like to buy our farm? He said, yes, I will. And he had no way to buy the farm, Brian. No way whatsoever to buy the farm. He said, I'll be right over at your house. Drove right over there. He offered them twice as much as what the cousin who was going to buy the family farm thought it was worth. So they're like, okay, well, if you're going to pay us that money, we can just make more on interest than we could have even rented out the land. So go ahead. And then he goes back to his banker that he did all his banking with to see if he could get finance for it. They agreed to finance him. And then a few weeks later, they came back, I'm sorry, due to such and such situation, we're not going to be able to finance you. So then he finds himself, oh, now where am I going to get money from? He saw another bank across the street that he never did money with before, banking or finance with before, walks across the street, goes in, shakes the hands of the banker, gets a finance deal done with them. And this was back when relationships mattered more. As before closing, he sold 40 acres of the farm he was about to buy to the local school board because they were going to build an elementary school. So by the time he went to closing, he put zero down, had thousands of dollars worth of equity on this big farm. 2 years later, the agricultural prices went up so much that the farm was worth double what it was prior. So from going to feeling defrauded and left for dead on a business venture, just 3-4 years later, then he got a farm with no money down, and it's worth twice as much as the purchase price. So I guess that's how I view life, Brian. It's not that I've never lost money. I've lost large sums of money. I've also made large sums of money. I can see sometimes I'm in a season of earning. Sometimes I'm in a season of learning, right? But I know that on the other side of the season of learning, that I believe that there's a significant season of earning ahead of me too. And so my dad sent me that book to encourage me, and I texted him like, hey, Dad, that was really encouraging. And thank you for sending that to me. So I probably answered your question with too many words, but that story's out there for somebody,
Yeah, no, there's so much wisdom in that, and I completely subscribe to it. I think the only sort of twist I put on my own question is that I don't think you should, well, I can't say you should never regret something, but you should take lessons and learn from them. But if you make decisions based on certain criteria and you're wrong, then you're just wrong. And there's nothing to be gained by carrying that forward. And the mistakes that I've made in the past, I think that's what took me so long in terms of getting out of that rut, was that I was carrying it forward with me. And that's why I see so much wisdom in what you said from that book, because it makes so much sense, because you will escape that sort of spiral that much quicker if you accept that you made a mistake and you learn from it whatever you can and move forward and be positive about what the future may hold. Because especially with a sector like the junior resource sector, I think there is so much upside that can be attained especially if you hit the cycle right. But if you just do a little bit more work than the general or average guy does out there, you separate yourself so much. And the more you can learn from your mistakes too, that puts you in a whole other group of investors out there.
And Brian, I wanted to point out, and I've never said this to you since it happened, but gold hit 3,500 an ounce, right? You made a prediction on this show that gold would hit $3,500 an ounce. So like, you're a macro expert now. How do you feel about that?
That I know is not true. If I take a stab at the dark, and I've been wrong way more times than I've been right.
Yeah.
But gold hitting 3,500, honestly, Bill, like I've thought about it previously, and I'd hear people talk, other friends, and then in other interviews of people I respect, and they would talk about, let's say, $5,000, $7,000, $10,000 gold. And I was like, oh, yeah, sure, like in the future, I can see where things are headed. That sort of makes sense to me, but I never put much stock into it. Now you see what's going on in the world socially, financially, the price action on gold, the reasons why I think the gold price is going up, and man, I see all the reasons in the world of why we are where we are today, and probably headed higher. And if the equities, when they actually do catch up, again, I think we're right on that precipice of that really big definable move. And each time that's happened in my life, the first time it happened in 2016, it changed my life. And in 2020 was the best financial year I had to date. And this looks way bigger than that.
Excellent. Well, if you've enjoyed this conversation, please subscribe if you haven't. If you listen on Spotify or iTunes or the various podcast forums, if you wouldn't mind rating and reviewing, if you've gleaned from this show over the years, or even just this show, if it's your first episode, we would appreciate that. And Brian, I'll chat with you again in a month, and you'll be able to hear from Brian and I do a conversation like this about once a month. So we'll touch base with all our listeners in about 4 weeks.